Namaskar all, I am Dr. Preeti Sharma, Senior Assistant Professor from IIS Deemed to be University, Jaipur. In this video, I am going to cover the different functions of financial management and its limitations. Now, it is very important to understand some important functions of financial management, which is required to be taken by the financial manager. So, basically it is bifurcated into three categories, that is primary functions, subsidiary functions and routine functions. Now, let us first discuss about primary functions of financial management. In this, financial manager has to first prepare a financial plan. In this financial plan, he has to determine the long-term and short-term objectives of the firm. He has to formulate the financial policies, that is determining the capital structure, capitalization and sources of finance. After making the financial plan, it is very important that there should be a proper control over the financial resources, otherwise it would result in wastages of resources. So, financial control is very important for the success of the success or proper execution of the operations of the business. For making a proper financial control, there are certain steps in controlling. In that case, financial manager can establish certain standards of performance. Then these standards can be compared with actual performance, and if there are any deviations. Now, what are the deviations? Let us say if your actual performance is less than the standard sets by you, then in that case these deviations occur, and in that case financial manager can take some remedial measures in order to sort out this problem. After that, the next role of financial manager is related to acquisition of funds. Now, what is acquisition of funds? That is acquiring different sources of finance at right time at right cost, and these sources of finance can be raised from the market either by way of issue of equity shares, preference shares, debentures or loans taken from different financial institutions. Now, next function is allocation of funds, or which we can also call it investment of funds. So, once we have acquired those funds, it is very important to allocate or to invest these funds in those kinds of projects from where we can maximize the returns. Now, for this purpose, financial manager can take the help of various capital budgeting techniques which would help them to decide where to invest. After that, the next important function of financial management is dividend decision, which is a decision related to distribution of profits in the form of dividend to shareholders and retained earnings. So, retained earning means in this some proportion of profit will be retained by the business, so that can be used for further expansion of the business later on. So, these are some of the primary functions of financial management. Now, next we have subsidiary function. Subsidiary functions may like we can discuss about liquidity function. As we know, it is very important to maintain certain amount of cash in order to meet day-to-day requirements of the business. Like we require cash for making payment to creditors or for making payment of electricity bills, stationery expenses or paying wages or salaries to employees. So, that is why it is very important to maintain an optimum cash balance between inflow and outflow of cash. And for this purpose, we can financial manager can use various techniques, like they can prepare a cash budgets and different methods of forecasting. Cash forecasting methods can also be used in determining the liquidity position of the business. Next type of subsidiary function can be profitability function. As we know that the main objective of any organization is to maximize the profits of the business, and for maximizing the profits of the business, financial manager can use various techniques like cash planning, working capital management or cost control. So, these are certain techniques which would help them to maximize the profits of the business. Next type of function could be evaluation of performance of business. So, it is the responsibility of the financial manager that he has to measure the performance of the business and should submit the reports in front of the top management. And for measuring the performance of the business, he has to set certain standards, and then these standards can be compared with the actual performance, and later on can take certain remedial measures if any deviations occur. Then another point or another subsidiary function could be coordination with other departments. Yes, it is the responsibility of the finance manager that he has to maintain uniformity in the decisions taken by the different departments of the organization, because all the departments of the organization are entirely depend on the finance department for meeting their own funding requirements. So, these are all subsidiary functions. Next, we have routine functions, which we can also call it incidental functions, which is related to day-to-day decisions taken by the organization. It can be related to safeguarding of cash receipts and payments, maintenance of accounts or preparation of different kinds of reports, maintaining relations with the financial institutions, etc. So, these are some of the important functions of financial management, or we can say these are different types of roles which is required to be performed by the financial manager. Apart from these functions or importance of financial management, there are certain limitations also. Like, as we know that financial decisions are always taken on the basis of the accounting results. Now, you just imagine if accounting records are not correct, or maybe there is some error, then in that case the decisions which are taken on the basis of these accounting records will also be incorrect. That is why it is one of the major limitation of financial management. Another thing, as we know that financial management is related to different fields, like it is related to statistics, or it is related to management or mathematics. That means the full benefits of financial management can be derived only when a single person may possess the knowledge of all different kinds of subjects, but it is just next to impossible to find out that person or a single person who possess the knowledge of different fields of management. So, that is why it could be another limitation of financial management. And at last, it is very expensive or uneconomical. So, generally it can be afforded. I mean, installation of these financial management techniques would require heavy investments, which can be generally afforded by large scale organizations. So, these are some of the limitations of financial management. At last, I would like to conclude that the success and survival of any business depends upon the ability of the firm to make the optimum utilization of the financial resources. That is why financial management is considered to be an important aspect of any kind of organization. Thank you so much.